Hi, folks. My name is Mike Neft. I'm one of the managing partners of Secure Retirement Strategies, and I'm responsible for managing our registered investment advisory firm, Duke & Duke Wealth Management, a wholly owned subsidiary of Secure Retirement Strategies. We manage a lot of portfolios, and we design portfolios that are geared to our individual clients' goals, needs, and suitability and risk tolerance. But one of the most popular portfolios we have is our dividend portfolio. And the first thing I have to say is past performance is never a guarantee of future performance. We can only go by how well we have performed in the past, and based always upon market conditions, we try to exceed and achieve a better rate of return than the market does. By nature, a company or an ETF or a mutual fund that pays dividends or is geared to paying dividends is going to be a more conservative company than an aggressive company like a Google, like a Facebook, like a Tesla that don't pay or doesn't pay much of a dividend. We look for the bluest of the blue chip companies within the ETFs, the exchange traded funds that we deal with. And we typically have a portfolio that's paying a very good dividend that's anywhere from 2 to 3 times higher than the rate of return or the dividend on the Standard & Poor's 500. And we're pretty proud of the performance of this portfolio because for 2022, the markets have been down quite a bit. The markets, whether it be the S&P, whether it be the Dow, whether it be the NASDAQ, are down over 20% this year. People have lost money. Nobody's happy about that, and we certainly aren't either. But if we can mitigate those losses, beat the performance of those indexes like the S&P or like the NASDAQ or like the Dow, our clients are going to feel much better. And our dividend portfolio is one which is actually showing a return, a positive return, both for the last 3 months, the last 12 months, and has actually beaten the S&P over the last 3 years, 5 years, and 10 years. We're pretty proud of that. It's a conservative portfolio, has a beta of about 0.93. And what that means is a beta of 1 is equal to the S&P 500. The S&P 500 is a growth vehicle. And if you can outperform the S&P 500, you typically are given a higher beta by Morningstar, like 1.01, 1.02, 1.06, 1.07. But to have a beta which is less risk than the S&P 500, but still be outperforming the S&P 500 with a lower beta, we're pretty proud of that fact. We would like to show you how we can do that. We would like to show you the performance of those numbers. And once again, we tell this all the time because the markets, we're going to do our best to manage money when they're good, when they're bad, but we can't ever sit here and tell you that we're going to consistently beat the market. Our past performance cannot be a guarantee of future performance, only our worded dedication that we always strive to beat those indexes and have been very successful in doing so. So give us the opportunity to show you how we can manage money for you. Let us show you our dividend portfolio among all of our other portfolios as well too, and we'll design that portfolio for you based upon your risk tolerance, based upon your goals, and based upon your objectives. So give us a call. We'd like that opportunity to speak with you. Look us up on the web, www.srsstrategies.com, or give us a call, 267-544-0333. Thank you very much, folks.